Cash flow is the reason 97% of agencies will fail. Without positive cash flow, you won't be able to make payroll, you won't be able to deliver client work, and you'll get in trouble with HMRC. My name is Rehan. I'm a chartered accountant and agency CFO. I've worked with hundreds of agencies to help them make more money and pay less tax. In this video, I'm going to share some simple tips and tricks that I use in my portfolio of agency clients to keep cash flowing. What I'm going to share will help your agency survive whatever happens to the economy. Let's get started. First, let's look at the root cause of cash issues within agencies. Number one, agencies often don't get paid in time, which makes it difficult for them to make payroll and pay other expenses to keep the business running. Number two is that income isn't always steady. One month you might make a lot of money, the next month not so much. These ups and downs can make it difficult to manage your cash flow, but there are ways to fix these problems. These 5 tips will help you keep cash flowing in your agency so you don't fall into that 97% that will fail. Tip number 1 is to get paid faster. And when I say faster, I mean before you delivered the work, not 30 or 60 days later. Whether your service is retainer-based or project-based, ask the client for payment upfront. If it's a long project and they're unwilling to, then get something upfront that at least covers the cost that you're putting in. By doing this, you'll have cash on hand to cover the costs associated with that piece of work, which means there's less risk to your business and less risk that you need to dip into your personal finances. Another way you can get paid faster is to send more frequent invoices. So rather than sending them monthly, send them weekly or every other week with shorter payment term. The faster you send invoices, the faster you get paid. All of these methods are designed to get cash into the business quickly while minimizing the risk to you. The second tip is to always have cash put aside. This is your emergency fund. It's there for unexpected costs. Maybe a big client pays late or some equipment breaks down and you need to replace it. If you have money saved for these reasons, you can cover the costs without stress. My recommendation for agencies is to hold somewhere between 3 and 6 months of your fixed costs. That way, even if business slows down, you're still in a good position. It's important to remember that building an emergency fund doesn't happen overnight. You need to put small amounts of money aside each time you get paid, so that you're slowly building up those reserves. The third tip is to keep an eye on your spending. It's easy to lose track of where your money's going. Small expenses like software subscriptions can quickly add up. My recommendation is to review your costs at least quarterly. The easiest way to do this is to pull a transaction report for software costs from your accounting system like Xero. But if you don't have a system in place, you can also just get your bank statement for the last month and go down line by line, ticking off those which you can either cancel or downgrade if you're not using all of the features. Cutting unnecessary costs frees up cash that you can use to then reinvest in growing your business. The fourth tip is about borrowing money. Sometimes you might need to borrow to cover expenses or even to grow. This could come through a loan, an investor, or even a credit card, but make sure you only borrow what you need. Interest and debt repayments can suffocate your cash flow for years to come. Don't get me wrong, borrowing can help when you're stuck in a hole or when you have a specific growth purpose for it, but it's important to use debt as a tool and not as a crutch. So before borrowing, make sure you have a plan to repay it and you understand the impact it's going to have on your future cash flow. And tip number 5 is to use a tool or a software to track your cash flow, not a spreadsheet. Spreadsheets are often wrong. They're time-consuming to update, and they don't give you the information presented in a way that you can actually understand and action. There's loads of tools and software out there that will link in with your accounting system and automatically update itself. That way, if your accountant's doing their job in keeping your accounts up to date, you know your cash flow forecast is accurate, and you can really quickly log in and model through the impact of various different scenarios and decisions that you need to make. You make managing your cash flow so much less stressful and more effective. That's my 5 tips on managing cash flow within an agency. This video was helpful. Give it a like below and subscribe to my channel for more agency finance content.